RWE is a power producer based in Germany, founded in 1898. As a result of its long history, it produces both conventional energy as well as renewable energy. In its conventional business, it produces coal, nuclear, natural gas, and hydro. And in its renewable energy development business, it produces offshore wind, onshore wind, solar, and battery power. As a result of the unique position that RWE holds in Europe and the energy transition, it meets one of our key criteria, which is a company which provides critical infrastructure and has a tailwind from a long-term thematic. In 2022, when Russia invaded Ukraine, it sparked the energy crisis, and RWE stepped up by producing and operating floating storage regasification units on behalf of the German government. Now that those are operating, they have handed the operations over to the German government. They've also producing, or are in the process of developing, permanent liquefied natural gas import facilities to help wean off Europe from piped gas that comes primarily from Russia. Out longer term, the company is developing renewable energy in Europe as well as globally. Renewable energy in Europe is important as it helps provide energy independence for the continent and independence from political conflict. By 2030, the company estimates that they will have 65 gigawatts of renewable capacity. This is more than double their current capacity, and it provides a significant growth driver for the business. An important aspect of this growth is that it's diversified across both technologies and regions. We like the diversification of both technology and region because we see that there will likely be bumps along the road, as there has been in the past, from the energy transition. This will allow the company to allocate capital to different technologies and to different regions as they see the policymakers and supply chains developing at different paces. Since we took our initial position in RWE in 2021, the stock has performed reasonably well despite some significant headwinds, including higher interest rates, higher capex, and the European energy crisis. Despite these headwinds, RWE has performed well on an absolute basis as well as against its peers. As patient investors, we look towards the future, but we've also increased and decreased our position size to adjust for the position size as volatility has increased or decreased and prospects have improved or degraded over this time. When we look at a company like RWE, we like to value it on a sum of the parts basis. When you have a complex company with many different business units, it helps to be able to take a risk-reward approach on an individual unit basis. So when we look at one business unit which has a higher risk profile or a lower growth profile, we're able to value that business independently of the others. Adding up the sum of the parts, we see an attractive risk-reward return for RWE and like its position in the future. This approach allows us also to look at the debt level of the company and attribute it to individual business units. We like that RWE has a low debt level, and this provides increased flexibility for the company to be able to invest wisely as well as allocate up and down capital as the cycle progresses. Long term, we think RWE has a bright future and we like the prospects for the business.